It is Trading Psychology Day around here. Once again, we're going to discuss a few tips and tricks that you can use with your trading to manage a loss. And specifically, I want to discuss a few things when you are actually in a trade, not necessarily after the fact, once we're done and, we all feel bad about it and we got to go out and, drown our sorrows. But let's talk about how we can manage the trade when we're stuck in a loss, guys.
So the first thing you've got to be able to understand is losses are the cost of doing business. Like, there is simply no way, nobody wins on 100% of their trades, and anybody that tells you they do is an algo or they are cheating. It's just that plain and simple. There is no way you're going to shoot 100%, and you're going to run into these situations from time to time. Now, obviously, I'll start off by saying you should always predetermine how much you're willing to risk. Where is your exit point? What does it mean to be wrong? And that way, when you take a hit, it's something that you can stomach. But that's not always going to be the case. Now, I'm going to show you some moves here in Tesla, and you might have this on a 15-minute standout. Now, Tesla had a couple of days in pulling back, and it made this bottom at 1080. And I will tell you, the 1085 level, which I was all about today, and it was a great level, I took it to the long side in this trade through 1085. And you can see what happened when it blew through the bottom. Now, there is zero chance, there was never any way when taking this breakout that it wasn't going to be an abject disaster. I was going to lose. It's a matter of how much at that particular point. And it just comes down to this. You have to be able to identify what wrong means. Has anything changed? The pre-market low was down here at 65. Has anything changed in the market, in the stock, that has changed where my out needs to be? And nothing had, so you suck it up. Now, some people block P&L, don't even look at it, only concentrate on the levels. Some people say, and I actually like to say this, ignore your entry price, ignore your cost base. Those things don't matter. It is about what is wrong and where you're going to get out. And when nothing has changed, sometimes simply putting a stop order in at that level and making sure you get out is the best way to approach it. That's what I did here. And I'm not showing it because it's a proud trade. Downtrend, trying to catch a break like this, running into resistance, it's ugly. It was never going to win. But if you don't take your stop, it's just going to get a heck of a lot worse. Averaging down into it, not going to help things whatsoever. I think stop losses can definitely help. But removing the P&L from the equation and focusing on what does it mean to be wrong, and has anything changed? That's what saved me in this situation, even though I took a hit, and you're going to take hits from time to time. You got to be able to do it.
Yeah, exactly, 100%. I mean, managing your losses is exactly what we're talking about here. And if you don't have a plan of action, then it's impossible to manage because you don't have, something to base your trade off of. I'm going to do a little bit more longer term here. And, this is one thing I look at. This is a 50-period moving average. And I think that if you're going to swing trade or you're going to look to, invest in something, you want to be able to identify when a stock is above or below the 50-period moving average and then try to figure out why it's there, right? In a name like Microsoft, it's obviously getting hit right now because we have a little bit of a sick NASDAQ coming down. And we know that big cap tech has been getting hit recently. Along with a lot of names in the NASDAQ. So when you're down below the 50-period moving average, I like to look back and sort of tell myself, okay, here, if I'm now going to take a short in Microsoft because, hey, I believe that the market's going to start heading back down in and we could come into the 200 period or something like that, I believe it's very, very important that we don't hold anything when trends break. So that's kind of my tip here is look at a little bit of a larger time frame and try to pick out some trends and don't complicate it. If you're trying to hold something for a big winner, whether or not it be a multi-day, multi-week, multi-month, whatever, use something like a 50-period moving average. Keep it as simple as possible. So again, don't fight the trend to manage your losses. And another thing is too, keep it simple. Just be simple. Don't overthink things. Sometimes when you're in a trade, and I'll give you another real life example right now, AMD today, and we don't have to look at a daily chart, we'll look at this chart right here. You could see, we were long, we switched it up as the NASDAQ started to go down, and then we were favoring the short, playing the trend again in the NASDAQ, and every single time we got stopped out, the hits were small little cuts, right? And then we put one on that we feels like the top, and then we were able to cash out multiple dollars and then get it reloaded again. So as you can see, as the trend starts going down, we switch from long bias over to short and cash in again. So, hey, this is your tip here. Play the trend. and keep it simple. You don't need to outthink the market. Remember, you're in control of your stops, so make sure that you put them in.
That old statement, plan your trade, trade your plan. It's simple, but it works, guys. You have to have a plan before you enter the market. It's that simple.